you should be able to go into the library, right? How to spot profitable timing signals. This is in here. You want to do some self-study? Trending with moving averages. Read this, commit it to memory, understand how this works. Then come into the library again, pull up Domino Indicator, read this. Just understand how this works. Or if you want a guided education, take the education program. So, an image like this is not really secret. What we've just created is the index, which is nothing more than, like about 40 or 50 technical indicators all smushed into one. And then we have a couple moving averages of the index itself. This kind of image is it's a little bit splotchy, to be honest with you. I don't think you can take a lot of information out of this. What I would like to see are M's and W's. And what I just see here is stuff sort of just oscillating back and forth. Maybe we hit a little bit of an extreme low there. If we could get a W to come in here, great. That would be awesome. And of course, you'll probably see W's in price. This thing just sort of grinding its way lower. I don't really see any real clear W's here. I mean, there was an attempted one through this. And really, just like moving averages on price, you can discern the trend just by what is the index doing, what's the fast moving average doing, what's the slow moving average doing. So if the slow moving average is higher than the fast moving average, then that must mean it's in a bear trend. And if the index itself is below the fast moving average, then that must mean that it's in a bear trend. And really, this is just, it's really, don't overthink this stuff. This is, remember I showed you, and I don't know whether, David, you've taken the education program. It might behoove you just to do the education program, but we cover moving averages in level 2, and I give you this document, and I suggest that you see if you can build a moving average trading system. And in this particular case, this is the 4-day and the 9-day and the 18-day moving average system, and how sort of one crossing the other works as a trading system. And when all three are pointing in the same direction, that's obviously a very powerful signal. And when you get these, we like to call them sort of rainbow crosses, where all the moving averages are pointing up and then they shift all instantly, they all point down. And that speaks to Nico Barber. I don't know whether we have in the Domino Indicator. This is all covered in the level 2 program. And this is the way that we recommend you use moving averages to help you understand market state. It looks something like this: awakening, uptrend, bull market, weakening, warning, downtrend, bottoming, and it just goes back and forth, back and forth. And this is it's in Dutch, so this is like fast moving average, medium term moving average, slow moving average. And so you can see those relationships. As they cross, you get different signals. So if you want to use 3 different moving averages, you can basically get a moving average system set up. And just based on how the moving averages are relative to each other, he actually creates a scoring system. And, when fast moving averages crosses a medium term moving average, or, whatever, that will change the scoring as they go and sort of look something along this line. So you can use the same logic when it comes to the dashboard signals, basically the same thing. So in this particular case, the index itself broke above both moving averages, but you can see that the fast moving average is still below the medium term moving average. So you're going to get like a bullish turn like Nico, but notice that was taken back very quickly because the fast moving average is still below the slow moving average, so that never turned back up. So that would be sort of like Nico Barber. That would be kind of like not this, but that would be sort of like this, but then this thing went back down and all the moving averages are all bearish again. Again, this is covered in the education program. You can build indicators that will actually visually show you what those relationships look like on a scoring system. And it's all about, just fast moving or momentum, right? When we say TA rating, the weekly commodity trend survey that I did, and I used to do this on all of the commodities. So that's over here. So you see it says weekly commodity trend summary. So that's what, and really I used to just do it for the commodities, but we've added in crypto, we've added in country funds, currencies, Dow Industrials, transports, ETFs, sector ETFs, and the stock indexes. And what we're doing here, and again, this is part of the value added package of the pro membership, is this just simply scores whether an asset is above or below its 52-week range. I first started out, I built all of this on these Google spreadsheets, and then I asked Stuart if we could transfer this to the website. And what you see on the website now is Stuart's interpretation. What this scoring system is based on is this image. And this is how it works. Is there's basically two scores. There's the relative distance to the mean, and the mean, of course, is the 50% rule. So if it's way above the 50% rule, it's going to get a really low score, i.e., probably not very bullish, maybe even bearish. If it's back at the mean, then it's going to get like a neutral score. So relative near, nah, right? If it's way below the 50% level, then it's going to get a bullish score. And this just basically oscillates back and forth. Are we above the 50% level? Are we below the 50% level? And this is basically the way assets move. They oscillate back and forth. Then the second component of this is the really simple weekly, because remember, this is a weekly commodity trend survey, relationship of the 13 EMA and the 30 SMA. And in the moving average module of the education program, I go into great lengths about how this is my favorite moving average system to identify trend. Just to simply show you, we'll do Mr. Kawasaki's chart. But let's go SPY. All right, here is the S&P 500. And I really, honestly, think you got to take the education program. It's too much information for you just to try and learn through just sort of poking around on the site, which is probably not a good thing for new people that want to join the site and are just like, hey, I want to join the pro membership and it's going to make me tons and tons of money just being that. If you don't understand this stuff, then you're kind of setting yourself up for a bit of trouble. But anyway, here is the weekly price chart on the S&P 500. And we used to run, or at least I used to run an advisory service. And you can see this was the sickness right here. Actually, prior to the sickness, Trump coming into office. Actually, I suppose Trump coming into office was back here. I mean, look at that signal, eh? Holy moly. So that was one directional and it didn't cross back bearish until there. That was one signal. Talk about a bull trend, eh? So, and it just goes back and forth. I mean, the same thing through the great financial crisis, which was way over here. And I actually even put a blog post out when this happened. We had the moving averages cross bearish after a very long period of bull. And if you had just obeyed that one signal, you avoided that entire great financial crisis nonsense. Then it crosses back bullishly here and you captured that move. Then you hopped off, then you hopped right back on again and captured that move. Then you hopped off, and hopefully you can see how this works. It's pretty straightforward. So what's the signal telling you right now? It actually issued a buy, I guess probably about a year ago, and it's just been working its way up and it's still in a buy. So that's the premise behind this scoring system. So where is the market relative to the mean? What is it doing relative to its moving averages? So this is how this system works. You can see on here, we have the price, we have the 52-week high and the 52-week low. Add them together, divided by 2, you get the 50% rule. That is the first component of this screen. Where are we relative to the mean? And it gets a score. The next component is what's the weekly 13 EMA and what's the weekly 30 SMA, and its relationship gets a score. If the market is below, then it gets a negative reading. If the market is above, it gets a positive reading. And you can just see it's just twos and ones. You add it all together and it gives you this oscillation between 0 and 6. And really, I mean, just come down and look. And if you see, let's find one that has like a really poor rating. How about Bitcoin? Bitcoin has a 2 52 rating. Now, why? Well, because if you take the 52-week high, the 52-week low, 15 and change, 52-week high, 3180, add them together and divide by 2, 50% level is 23,000. So we are above the 50% rule. That's going to get a negative vote, right? That's not bullish. That's actually saying, you know what? This thing's actually a little dangerous. It should actually work its way back down to the mean. That's what the 50% rule is. Then we ask, okay, well, what is the weekly 13 EMA? It's 27.2. What is the weekly 30 SMA? That's 27.6. Well, that's negative. Remember Nico Barber, what I said about that. So that's a negative reading. You have a negative reading here. You have a negative reading here. As a result, you get a negative score. It's just that simple. And then conversely, if we look at a name like Adam here, you notice 52-week low, 6.29, 52-week high, 15.83. So the 50% rule, or the mean, is actually about $3 or $4 higher than where we are. That's going to get a positive score. But notice that the fast moving average is below the slow moving average. That's going to get a negative score. Put it together, because it's below the 50% level, it gets a positive reading. And this is a buy, quote unquote, a 6 when both the market is below the 50% level and the moving averages are pointing up, i.e. the fast moving average is above the slow moving average, i.e. Nico Barber. You should be able to go into the library, right? How to spot profitable timing signals. This is in here. You want to do some self-study? Trending with moving averages. Read this. Commit it to memory. Understand how this works. Then come into the library again. Pull up Domino Indicator. Read this. Just understand how this works. Or if you want a guided education, take the education program. And of course, this is all explained in detail. And I think week 2 or week 3 of the level 2 program. So it's not even level 3. It's basically just a continuation of the level 1 program.